Hey, how are you? I'm Duncan McPherson, and welcome back to my channel. If you're an online American retailer selling goods into Canada, today's video is for you. We will be outlining cradle to grave the Canadian tax bureaucracy that you must go through to get moving and get selling so you can expand and thrive here in Canada. There are way too many steps for you, unfortunately. So once again, please listen up. It's painful, but we will get you through it. And for more information on non-resident compliance, check me out at themactax.com. And don't forget to subscribe for more tips on navigating the Canadian tax system to avoid all the bullshit you're probably already experiencing. So I'm going to discuss two scenarios with you today. First one's pretty simple. Now, in the first scenario, you're selling your products through a fulfillment platform like Amazon, and you have no other nexus with Canada. That's it. They buy your stuff through Amazon. Amazon takes care of it all. Congratulations, you're done. There's nothing else you need to do. Unless if you have other nexus up here, okay? So you're sending salespeople up here or other bits and pieces, there could be more tax compliance for you. Please check out my videos on non-resident businesses expanding into Canada. There's a lot of information there that'll help you out if that's the case. But for now, if you're using a fulfillment place like Amazon and that's all you're doing, that's it, you're done. You don't have anything else to do up here. Congratulations. Now in scenario two, and this is where you'll want to start taking notes. So in this situation, you're selling into Canada from your own website. You're selling your products from your website and you're shipping them into Canada, third party, through FedEx or through the mail, but you are not using your own carriers. As an aside, the reason is if you're using your own shipping into Canada, then you're technically doing business in Canada, and then you're back into my other videos about non-residents doing business in Canada, okay? So for this scenario, you're selling products into Canada from your website and you're shipping them through a third-party carrier. Okay, that's the scenario. So the first thing you need to do, and I am dead serious here, the first thing you need to do is find a Canadian CPA, okay? And I am not being facetious here. The problem is, CRA is moving to be an entirely online organization and get rid of snail mail completely. They're trying to do everything that you do, scan, PDF, and upload. And the issue is you can only access the CRA online site if somebody in your organization has a Canadian Social Security number, what we call a social insurance number. Without that, you cannot access their site, you cannot communicate with them effectively, and you cannot upload information or register for anything. So this is why you need a Canadian CPA to help you out. It's not a plug, it's a necessity. Now, this is a plug, preferably a CPA that knows both the Canadian and US tax systems. As an aside, there are other reasons why you need a Canadian CPA. And luckily for you, I have created a video dedicated to this very topic. You'll find it right up here in the corner. Just click on the cue card and have a look at it. There is a lot of information there that is very relevant for you. Now, step number two. In this situation, you need to get a Canadian business number. A Canadian business number is the American equivalent of an EIN number. You cannot operate in Canada without a business number, just like you cannot operate in the United States without an EIN number. Please see my earlier video where I talk about in detail applying for a Canadian BIN number. Applying for the business number can be problematic as hell if you do not know what you're doing. Step number three, register for the goods and services tax, aka GST, and for customs and duty as well. Luckily, registering for GST and customs is done merely by checking the box at the same time that you obtain your business number. It's that simple. If you have already got a business number, but not a GST number and customs number, I'm not going to get into it here. It's not too difficult to get those numbers once you have the business number. In fact, it's pretty easy. Just keep in mind, it is a little bit of a different process than when you apply for them at the time you apply for the business number. Now, you will be required to collect and remit our national sales tax, aka the GST. But here is where it gets really weird. Welcome to Canada. Of our 10 provinces and 3 territories, they all have different rates for the GST. But lucky for you, doesn't affect you. Whatever you collect from all of those 10 provinces, you just put in one lump sum on your GST return and remit it. It's up to CRA to separate it all out. We actually have no idea how they do that, but that's how the system goes. So don't worry about that you have to charge different amounts into different geographical regions of Canada. Not your problem. However, there is one added complication. When you're selling into Quebec, you do collect the national sales tax, but you remit it to Quebec, not to the federal government. So if you're selling in all 10 provinces and 3 territories, you will do one GST return for 9 provinces and 3 territories and a second GST return known as a QST return for filing in Quebec. This is because the French and English in Canada, after 400 years, still don't get along that well. Sorry about that. If you are selling directly to your customer in Canada, you are required to charge, collect, and remit the HST if your gross sales annually are 30,000 Canadian dollars or more. If you know that they're never going to hit that level, you never have to worry about registering for the HST. Lucky lucky you. You can voluntarily register for the HST even if your sales are under $30,000 and you 30,000 Canadian, and you probably should. And here is why. If all of a sudden your sales spike and midway through the tax year, you hit the $30,000 threshold, you've created a bit of a problem for yourself. It's a bit of a hassle to get around. It's not worth it. It's actually easier to file the returns than deal with that hassle. So my advice to you is if you are reasonably sure that sometime in the next 3 years, you're going to hit that $30,000 threshold, the best thing for you to do is to register for the GST now. Don't wait for the 30,000 threshold. Okay, step number 4, purchasing surety. This one is a little bit out there because there is no equivalent to this in the United States whatsoever. The goods and services tax you collect are considered to be trust funds. I will give you a metaphor. Suppose in the United States, your employer has withheld Medicare and Social Security tax from your paycheck and keeps them for himself and does not remit them to the IRS. Well, it's pretty obvious that that is an act of fraud. Unfortunately, GST funds are considered to be government trust funds, and the handling of these funds is treated with the same heavy hand that they treat payroll withholdings with. Bang. So you've been warned. So at the end of the day, do not fuck with your HST. But it goes one step further for non-residents, and this is the part where I say there is no US equivalent. Because you are a non-resident handling Canadian government trust funds, they insist that you post security equal to 50% of the HST that you collected in the previous year. So if you collected $1 million of HST in the previous year, you must provide the Canadian government with $500,000 of security. And this has got to be in the form of something really liquid like cash or a Canadian government bond. Ouch! This is even twice as nasty because you will never see this money again until after you stop selling into Canada. What a ripoff, eh? But luckily there is a way you can 99% avoid this hassle. And the reason that is the Canadian government will accept a surety bond in lieu of the security itself. This will normally cost you about 1% of the security. So if you were required to provide security of $500,000, this will normally cost you about $5,000 for the surety bond. Hey, but at least the $5,000 is deductible and you don't have to come up with $500,000. 2 points for you here. First off, I said earlier it has to be an approved surety company. Well, don't worry about this because there are dozens of approved companies and it's all the major insurers. So you're going to have no trouble finding a surety company to do this for you. And they're all used to it. They're familiar with it. The second point, and this one may or may not be problematic depending on your situation. Most surety companies require 2 years of financial statements prepared by a third-party accountant. Now, they do not have to be audited or reviewed financial statements, but they do have to be prepared by a third-party CPA. They cannot be internal financial statements. So as long as you have the financial statements and you got the name of the surety company, not a big deal. But hold on a sec, because there's one more point that is really peculiar about the security that you're required to post. For whatever reason, and we don't have a clue in the world why, CRA does not mention this to you, nor ask you for it, nor send you information on it, nor do anything else at the time you register for the GST. In fact, you might be actually selling into Canada a couple of years before you even get a letter saying, hey, wait, you got to post security. Well, don't worry, there's no penalty, but just be ready when you get the letter. Get your paperwork ready, get your surety company lined up, so when you get the letter from CRA, bang, you can just get it done and be done with it and move on. Okay, so that's it for the HST and the bond. Now, step number 5, register for customs and duty. Oh, wow, I don't even know where to begin this one, folks. In a couple of weeks, I am going to be posting a whole video just on this topic right now. It is too complicated to even insert here. Just know that if there is going to be customs and duty on your product, you can take over all the paperwork yourself, or you can hire a third-party freight forwarder, customs and duty shop to do it for you. That's all I'm going to say for now. The law's in flux, and I'm going to come back with a whole video on this topic. Step number 6. Corporate taxes. Here's your scenario. You're selling from your website in the US, you're shipping third-party carrier, you are not required to pay Canadian taxes. However, and I won't jump into the subtle difference here, there may be situations when you are required to file a Canadian tax return and claim treaty protection. It's not likely, I'm not going to get into it, there's too many finicky little details. Contact me and I'll go through your situation with you and tell you if you have to file a return and claim treaty protection or not. However, even if you do not need treaty protection, and even if you are not required to file a Canadian tax return, there is a logistical problem here. The logistical problem is this: your BIN number sits on the CRA computer as a corporate tax number, We quite often, because it appears on their computer that there's a corporate tax number with no corporate tax return. So you get a letter to file. And then you start arguing with CRA saying, hey, I don't have to file. I'm not carrying on business in Canada. And they say, well, you might be. And so you finally give up, you throw in the towel, and you file a nil return. Well, the problem is if the return's late, it's a $2,500 penalty. And at this point, you might be a couple of years in, and it's $2,500 plus $2,500 plus $2,500, depending on how many years they say you haven't filed. So I recommend this for all of my clients. File a nil return. It is not expensive. We just got to roll it forward and bang, hit send, and it's done. It's really not even worth going down the road and the hassle of fighting this out with CRA. You've got the number. Just get your Canadian CPA to put in your name and address on the T2 and send it in. It's blank. It's not a big deal, but you really protect yourself from a lot of hassles. Okay. And again, it's only because your business number sits on their system with no tax returns filed. Someone looks at it and thinks you haven't filed. Not true, but that's where we're at right now. So like I say, it's easier to file nil than not file. Now I have a Jerry Springer final thought for you. Although the CRA online technology is excellent, as they're going through this transition to be a completely online government department, there are bugs in the system for now. And for now, these bugs seem to be worse for non-resident filers. Right now, it's taking 4 and 5 months to do things that should be taking a couple of weeks. In fact, I can reach right over here and tell you for these 3 files, I've got authorizations tacked on your behalf, what you people would call powers of attorney. I couldn't submit them online because for some reason that part of their online portal is busted. So I called up CRA and they said, no problem. They gave me 2 fax numbers to send in those powers of attorney. And guess what? Neither of those fax numbers worked. So like I say, right now the system is being quite unfair to non-residents. So once you've made the decision to come into Canada, get going on the paperwork because it's going to take longer than it should for now. Or better yet, contact me through my website, themactax.com. If you need more information on any of this, that's what I am here for. And when you go to that website, you will get my phone number. You'll get me directly. There'll be no intermediary parties, not just a email that says info@mactax.com. No, you get the real McCoy when you call. Or better yet, get going right now and just click on the link below. We can work on all of this together. Thank you for watching as always, and I'll see you on the next video. Take care and see you then.